Greetings, Algo artisans. Welcome to the Algo Factory October 6th, 2024 weekly Forex, crypto, and stock forecast. Let's just go ahead and jump right into the charts and see what's going to happen possibly this week. Here we go. Remember, nothing we say is investment advice. Please pause and read this disclaimer. Okay, well, let's take a look at the news events this week so we can make sure that we know when the market shocks are coming. Those who follow me know that I do not trade those events. I avoid them. I wait till all of that madness passes, and then I look for my entries. Take advantage of that volatility once the technical market unfolds. Monday itself doesn't have a lot of announcements, right? Nothing on the high impact level. A little bit of medium impact on Aussie dollar at about 8:30 p.m. EST. If you trade the Aussie, watch out for that. But Tuesday, same thing. Pretty clean week. We do have a little bit of data coming up for New Zealand, heavy impact at 9 p.m. EST, so watch out for that if trading the Kiwi. Wednesday, FOMC meeting minutes. Now, I'll probably stay away from trading Wednesday morning. We did have a jumbo cut, so there's a lot of new data coming out from the FOMC. At least a lot of people assume that there's going to be, those meeting minutes are going to be watched very closely, and therefore, if something comes out as a surprise, the markets could take a hard turn. So I'll probably stay out of trades, at least day trades, up until that happens at 2 p.m. EST on Wednesday. Thursday is going to be a big day. We have the core CPI, month over month, year over year, and unemployment claims all happening at the same time. And that's going to be a pretty big deal because the next look on interest rates is going to be influenced by this data, right? So CPI day is probably about as exciting as FOMC day. So I probably would only scalp after minutes on Wednesday. And then you're getting towards the market close. Like, I'll probably stop trading Tuesday night, come back on Thursday after this data comes out. This is about an hour before the market opens. It's going to happen at 8:30 a.m. EST. So once the market open happens, I might come on in and look for some opportunities once the shock is done and the technical market unfolds. For Friday, if you trade in the European session, watch out. You've got GDP coming out for the pound. That's going to happen at the European Open, which is 2 a.m. EST. And then at 6:30 a.m., we have Canadian high impact data coming out, unemployment and employment data coming out for the Canadian dollar. So if you're trading that pair, watch out. And also at 8:30 a.m. EST, the same time, is going to be PPI data, which can be pretty strong as far as its effect on the markets because this is the producer price index. So this kind of data, if it is way far away from the estimate, will push markets around. So I'm probably going to take profit on whatever I did, or at least take off the risk with what I did on Thursday and wait for this data to come out and then surf on Friday the rest of the day. Probably pull scalps because I tend not to hold trades over the weekend. All right, let's jump into the charts. Okay, so we'll start with Forex. We'll start with the EUR USD, the most liquid pair out there as far as I know of the 8 major Forex pairs. And this is actually pretty indicative of what's happening with the dollar in general as compared to other currencies. A lot of people thought that the dollar was going to get weak after the interest rate cuts and break loose of what is a multi-month and even a multi-year consolidation, right? This has been going on back and forth going back to 2023. One big long consolidation, and a lot of people thought I would break the top, and I even had a pretty small, very high reward, low risk trade based on that, and it went ahead and rejected down. So we know we're in a giant long consolidation here, and this is on the daily chart. Let me go ahead and map this out just a little more cleanly because we have some structure points that we need to pay some attention to. Price is pretty much right at one right now. Down here is a pretty decently formed consolidation. Not as clean as I'd like it, but they never are. Never a perfect box, but we do have some structure points right about here, right where price just broke below, and then we've got this one, this more recent structure right here, and there are two areas we got to look at as far as price needing to make a decision, might not want to go down. We have this older outside structure and some newer inside structure that does present some issues, right? So we have basically an order block right here where price might be attracted to, but right above that order block is going to be some structure where price does not want to go past it. Let's go ahead and put some arrows on so I can show you exactly what I'm talking about. We have this here where price came down, rallied right back up. We have this where price had gone up and knocked its head on that. And right here, a little bit older, but still relevant, some of that same structure. And now we have price right at that same exact level, having gone down and rallied back up, although it might be temporary. It's hard to say, but this is an important structure point, as we clearly have mapped out. Very important. And I would not want to short into this, not on a high time frame. I'd want to see what happens here. If it breaks below, I'd be interested in a possible short, but for now, I would not want to dive into a shallow pool at this point. As far as inside structure is concerned, it's pretty clean, top side all the way up to about here. You have some older structure to look at that is notable, right? So if we're going to map where price might go, there isn't really a problem overhead until we go all the way back here. Now that's pretty strong, but that's also pretty old, so I wouldn't worry so much about that. And it might be that we see a move up here, right? We might see price bounce right here just before the midline of this older, very large consolidation, right about halfway down. A lot of eyes are looking at that halfway midpoint. And what price may do at this point is it may bounce here and pull up. It may simply head up like this, go test some of this older structure that's on the outside, or even come all the way up here and test this right here. Or it might simply play around until it does something. We don't know yet. We don't have enough information yet to make a determination on that. Let's take a quick look at the algos. I can tell you right now there is some algorithmic reasons why price might want to pop up, but it looks as if for the moment it may need to gather some steam before it does that. So let's take a look. Yeah, see, looking on the higher time frame, things are rather bearish. So what I'm expecting to happen, if I just really had to make a decision as to what's going to happen, I would be able to trade on this, but I would say the price probably is going to play around in this area until it makes some kind of decision. We don't know what that looks like yet. We don't have enough data, but price eventually may pop up here and we might see the opportunity for a long. It's very possible. We do have a strong rally off that support right here, right about $0.0948, right about there. And if we get the right kind of finish on the current daily candle, this really is an 18-hour candle, but if we get the right finish on that candle, we could see price head up after that, get ourselves a nice long. So I probably would be looking for some kind of long. However, there's a lot of bearish pressure on this, right? So let's go down to a lower time frame and see what we can glean. Let's take a look at the swing trade time frames. We got the 3-hour here, a lot of indecision right here. Price not really making a decision based on neither candle theory nor algos as to what it wants to do. Again, I think we're going to see price range around in this area until it makes a decision. Now, technically, there was a long signal. We have, from a candle theory standpoint, price rallying up, and if we zoom in real close, we can see this hammer right here. And the next candle after that was a higher high and a higher close. You can see that right here, both the high and the close were higher. So it's a decent probability price will head back up, but the current candle is suffering a bit. So if I were to have entered right at this candle close, once that candle closed, I would be in a trade that would have had an entry right here, a stop loss somewhere down here. We'd have to calculate that later, but where would my targets be? Well, I probably would look at a 618 from the move down, and that's right below this older structure right there. Not a lot of risk to reward on that. I would need a better, deeper entry before I were interested in this. Technically, I could take the trade. It's a 1-to-1, a little bit better than that. That's acceptable for me. I can technically take it, or could have, but I did not. Mostly because the algos do not agree with that. We could see a pop up though. I could certainly look for some opportunities on a lower time frame for some scalps. But for the moment, I do think price is going to play around down in this area. It might get a second bullish indication for an entry down here, maybe a double bottom, and get a much lower entry for that upside breakout. However, I am not completely sure that I want to take that trade just yet. So a lot of bearish pressure, however, strong support. So price is going to have to move around, give me some indications, both algorithmically and on some price action before I really were to make any strong decision as to what I'm going to do. And I just don't see an entry for a long just yet, but might be able to see it, might be able to see something happen where price dips down, grabs some liquidity down here, and then heads up, and I might take profit right there at that 618. Be a beautiful counter trend trade, very, very available at that time. Not quite yet though. Let's see what happens. Let's move on to the pound versus the euro. Very similar look. Now on the weekly, this one is actually in a pretty clear uptrend. Higher highs, higher lows, and it broke above this resistance back in August, and it bounced off it again, headed up. Now it's back down at that resistance. So this actually is not the worst place to look for a possible long. Now this is the weekly chart. So let's take a look at the algos. It's a dangerous long right now. There is a fair amount of bearishness from an algorithmic standpoint. I may not want to take that. A lot of bearishness from the weekly and the monthly. So despite the possibility of a nice long happening, I'm not sure I want to take it. Might have to see what happens with that. We might be seeing the beginning of a head and shoulders. It's too soon to tell right now. We do have a support a little bit lower. We don't really have any strong support where price is right now. So we might see price again fool around like we just talked about with the euro and eventually make a choice up or down. And I might make a determination at that time again algorithmically. Maybe we'll have a range breakout of some kind. If price comes down here though, and the algos do give me the right kind of signal, I might find some on a lower time frame where I can knock along out of this. But for the moment, again, I'm flat flat on this. Very heavy bearishness from the higher time frame, not seeing enough on the mid and lower time frames for me to be excited about taking a long on this. Let's take a brief glance at the 3-hour, the swing trading time frame here. There's a little bit of bullishness in the algos, and yet price is not heading up. So the algos are bullish, but price is just getting knocked down over and over again. We might see a range get created in this area. We might see it. I don't have enough data yet for that, but if price does bounce around and make a relatively clear range and we see the volatility drop, we might be able to take advantage of a range breakout trade. Upside, downside, either way it's good. Let's take a look at the USD JPY, and then we'll run over to the indices and the cryptos. Okay, USD JPY on the weekly, pretty bullish on the algos. It's also made a fair amount of movement up, but with the weekly, I'd say it's got more up to go. Doesn't mean it won't pull back before it goes up. We can have a very clear definition of high time frame supports, resistances, and then we'll move down to the daily. The price is in an uptrend. Okay, we got higher highs, higher lows. So price again wants to head up, but we do have a local resistance that we have to deal with right here. So the way I might play this trade is to look for a break above that and grab along. So it would look something like this maybe. I could either enter right at the break, or I could look for a pullback and then grab that long right there. And then we have some resistance right here. And I think that's probably what's going to happen. That's what I got my eyes on right now, because the algos are so bullish. I don't want to take a short, not at this point. We have a head and shoulders bottom here that also played out beautifully. And it looks like I didn't catch that. Or if I did, I didn't trade it. The JPY has been the subject of a lot of manipulation lately, a lot of bank news, headline risk. So it hasn't been as friendly to trade lately, so I haven't had my eye on it outside of scalps. But this is a beautiful head and shoulders bottom breakout right there. And the targets for that, Fibonacci wise, are going to be right here. It's already hit one target. Second target is up here at 151.63. So if I were to take that long based on that, and on a lower time frame everything else made sense, then I could look for a long, something like this. I could either grab it right as it breaks out, if the algos say, and in this case the algos are rather bullish. I might be okay with grabbing along as price breaks out. Now the stop loss is going to be dependent on structure and things like that, but I'm seeing at least a 2-to-1 up to that 618 target, up at 150, 158. So that's going to be it for the Forex pairs. Let's take a look at the E-mini. So this is the SP 500 futures, and we're just seeing a lot of bullishness in general, right? I know the algos, high time frame are all bullish. Everything wants to go up. Very simple, and that's just how things are lately for the past decade or two. For the most part, you have a few pullbacks. 2022 and 3 had some pullbacks, but I'd say for about now 65-70% of the time, price just goes up. As of now, I would expect price to at some point break this all-time high right here at 58.30. It did, as we talked about last week, come down to about this 57.20 and grab some liquidity. So it seems as if price is creating a pretty clear range. We have a lot of bounces right there at 57.20, a lot of rejections right there, 58.30, pretty clear. And I would be looking at an upside breakout just due to the algos, price action, knowing how the market works. And I probably would long the bottom. So if price came back down and touched 57.20, I might be interested in grabbing a long right there because the longs are paying out. But you know what? The shorts paying out too, aren't they? So you got to be careful with it because it seems like there's been a lack of liquidity in the market. You see all these wicks, price not moving a whole lot. Just got to be careful with it. That's why I would be a little biased toward taking longs, right? Because price is just overall bullish as hell. But I would be looking for longs right there. Now, if price broke out before it came down like that, I'd look for a pullback and grab a long. Where would it go? Let's take a look at the fibs. And this would be a higher time frame trade. If I were to do it this way, look at a Fibonacci extension from the most recent move up going back to the beginning of September. And my targets would be 5950-ish, 6100-ish. Probably front run those a bit. So that's what the trades would look like. And for the MYM1, this is the Dow Jones futures. Very similar look. I would be careful because you have a clearer range except for that move up where price tried to break out. Otherwise, you have a pretty clear range where price has been just bouncing back and forth between about 42,670, 42,200, right? In this case, I would be wary, right? If I was trading lower time frame, I wouldn't have as much of a problem taking the longs. And the indices do have a lot of liquidity, especially in the futures. So you might, on a low time frame, find a great long where if the right structure was in play, you could have a nice tight stop. Again, this would be very low time frame of something like this. You get yourself a nice, whatever, 3-to-1. I'd have to go down to low time frame for that. But we're just looking at the general move right now. And again, depending on how things go, we have the port strikes figured out. We have things in the Middle East. They're heating up, but actually there are some things in the background that not very many people know where markets could just continue to go up, especially your military industrial types. And we could see price do the same thing like we talked about. If I were to take that long, you'd probably be on a low time frame and I look out for this structure. I would at least take off some profit at that structure or at least remove some risk when it hit that structure. If I were to take the higher time frame look, upside targets 43.8 and 44.850 or so. well, right? Okay, NASDAQ, gonna look pretty similar, but NASDAQ has not been performing quite as well. So just the same, I would be long biased for the same exact reason. All the algos are bullish on these. But remember, you've got an all-time high back here from July, and then a recent high right there that you gotta beat. And even some local structure to look out for. So I wouldn't be quite as bullish on this one short time frame. Now, tech has always done well, and if we look at a higher time frame, this is going to be our Fibonacci, the same as last week. So you got your 272 that's right above this local structure. So I probably would take profit just below that, the structure itself as my 272. And if I got the breakout, then of course, might take my higher targets at 21.6. So lower target right about 20,800, higher target about 21,600. And that's what we got for the indices. Move on to Bitcoin. Okay, so I've had a long on for a short time on Bitcoin. I put a long on a few days ago as price looked like it was going to pop up out of this consolidation. We're going to zoom in and take a look at that right now. So price has been consolidating, and this is on the daily, so it's easier to see in a lower time frame, but you can see the wicks right there. There's some indecision in the market, and I had the algos saying the price would break up, and I've got some other data saying the price was going to head a little higher. What I would do is Bitcoin is pretty bullish on the daily. It's got a lot of resistance to meet on the higher time frame. I've been doing this for so long with the algos. I can tell you right now, there might be some pullbacks, but if it were ever to break out, now would be a pretty decent time to do it. Now, this is the weekly chart. If price broke above 66,700 and it stayed above that for a few days, then I think we'd be looking at a possible breakout. But remember, price still has to get above 70,100, right? So I've got this diagram that I drew before where if price were in this area that it's in now, I've been flat. Right? I'm not bullish or bearish really. I'm high time frame bullish because of the market and what it usually does, but just looking at the technicals, I'm bullish. As far as my trading is concerned, for my higher time frame stuff, I'm flat. Here I am lightly bullish, or slightly if you will. Now above 70,100 or so, that's when you start to see me get medium bullish if you will. And of course, once it breaks the all-time high, then as far as I'm concerned, it's blue skies above and we'll probably see the new all-time high. And as I've talked about before, my targets right now for all-time high are going to be 88,000 to 95,000. And I know that's an unpopular opinion. A lot of people think it can go up to 200,000, and it could absolutely go up there. It could also go to about 160. And if I were looking at the market, how I looked at it the last cycle and the cycle before, I would say 160 to 200,000 makes a lot of sense. What a lot of people are not making room for is now you have the institutional money in the game. The huge chunk of money that goes into crypto comes out of the US, and all the people who would be buying Bitcoin are now buying the ETFs. Oh, but it's a spot ETF, you say, right? Oh, it's a spot ETF, they have to buy Bitcoin to fund it. No, they don't. I mean, they do, and they are, but a lot of them can fake the numbers. And I know that is, I'm not saying it's true. This is just rumors, so don't take this for granted, but there's a lot of things that happen on accounting balance sheets where people say they can borrow it. Oh, you borrowed this many Bitcoin, whatever it is. And when it comes to borrowing and things like that, these asset managers that are running these ETFs, that own these ETFs, they are the masters at all that funny accounting gimmicks, right? So don't think for a minute that they're not playing games. I mean, if they could fund a $5 billion book of Bitcoin for a tenth of that, they will, right? They don't have to invest all of it. I'm not saying they're doing that. They could be buying every Bitcoin that people invest in, right? I'm not saying it's fake, but I'm saying it's very possibly fake. And I'm saying that the typical finance, your traditional finance, has a lot to gain from keeping Bitcoin from really growing. You know, they want people to play in their pool, and Bitcoin isn't quite their pool. They're making it their pool. It's not quite there yet. Take a quick look at Solana. Now, Solana has outperformed Bitcoin, bounced off of some liquidity, and I think it's going to travel up and hit about 155.50. I think Solana is going to come up there and grab that 155.50. Remember, this is the high time frame, right? But this is what we're looking at right now. Everything is consolidating, but Solana has moved mostly sideways, whilst Bitcoin has been moving down and to the right. Solana's been moving to the right, and we know a lot of volume goes through Solana because of the meme coin game, right? Now, there have been some other coins that have done well in that same kind of area, but Solana is what matters right now. And at this point, that is all we've got time for. If you have any questions, any requests, anything like that, go ahead, ask for them. Stocks, futures, you name it, crypto, Forex, I will do them all. In the meantime, we'll see you next week. Thanks for watching. AlgoFactory.tech.